Thank you, everyone. Let's get today's show started. This is Frontier Opening Bell. It's Wednesday, the 19th of May. I am hosting Omofaye. Let's take you through the market rounds. Quite a bit of Safaricom pulled the Nairobi stock market down yesterday because of its size in the market, 1.11%. Investors traded about $140 million worth of transactions on the Egyptian market, better by 1%. We saw the shares of the oil and mining company, coal and mining company, and a few others on the uptick. The Ivorian market crossed another reading to 151.49 on the composite by 62 basis points. Nigeria softened by nearly 0.75%, hanging around 39,000. And of course, South Africa was up by 0.06%. Just a very quick rundown of your equities market for Tuesday. So we're getting the whole news around the East Africa and the Horn of Africa's corridor with Moody's cutting, downgrading Ethiopia's credit rating and said there's a whole lot of review ahead. That comes as everyone is in Kenya is getting a little bit mixed with the latest IMF fresh fund that we expected to come to the Kenyatta's administration over the next couple of weeks. In the meantime, Sudan, just next door, got a $5 billion reprieve from France at the ongoing Financing Africa Forum in Paris. Safaricom says it's going to launch one capsule, one size fits all in pesos. It's called SuperApp. Everything in one single bullet. You bite it and you got it all Safaricom. But it's also moving on, raising its stake in the consortium bidding for the Ethiopian market. In electricity, KenGen is looking at a geothermal power project of $6.5 million. Asset Capital says it's got $100 million in seed funding. It's a private equity manager based in Kenya. And RwandAir says charity begins at home, focusing on African roots in recovery plans because the Western Hemisphere and Asia looks like a no-go area, at least in the short to medium term. Ali, let's start with Sudan, Ethiopia, and Kenya.
Yes, so thank you, Boss. And let me start with this investment conference where your president is visiting as well, President Buhari, and African Development Bank's President Adesina was there too. And we had a number of significant announcements that came out. Essentially, there seems to be a lot of momentum and support for this Prime Minister Hamdok regime that replaced the 30-plus year regime of Omar al-Bashir. And the biggest problem for the Sudanese really has been the debt. We've now heard that France will provide a $1.5 billion bridging loan for Sudan to clear its outstanding debts. And really, this looks like it's an enormous opportunity. I think it's interesting that France is taking such a big bet on Sudan. I think the Sudanese government have been very smart in terms of navigating the geoeconomics and geopolitics of the 21st century. But I think this is a significant step for this government in Sudan. Of course, we all watched the revolution unfold in 2019, and really, for me, the zeitgeist was really spectacular. You had women, children on the streets. Of course, there is still an issue around one of the interventions where quite a lot of civilians were killed that has not been publicized yet. But my takeaway is that Sudan is being well supported. Obviously, they got very complicated issues, very high food inflation, and it is a grain granary for the region, or it could be. But I think one of the biggest issues was capital, and now you can see this kind of support. What was interesting also was I read the policies that they're putting in place to excite international investors. I think a lot of our countries should look at what they're doing. It seemed very coherent and sensible and adult policy making thinking. So bullish about Sudan, clearly, but lots of issues to come out of. On the other side, we had this downgrade from Moody's of Ethiopia. Ratings action downgrades Ethiopia's ratings to C AA1 ratings on review for further downgrade. They said, talked about heightened political tensions, risk interfering with official sector support and undermining foreign investment that is critical for the government's financing in the near and medium term. I was looking at the Eurobonds. They sold off. They've been selling off ever since that intervention began in Tigray province. I take you back to a time when Ethiopia was growing in double digits and was the African Renaissance story par excellence. And it's rather, we've got now a very difficult situation unfolding there. Lots of potential, but really, people are very concerned about the state. Can it be held intact? I saw a headline in Foreign Affairs talking about the dissolution, that Abiy is leading it to dissolution. And these are real worries which are now being transmitted into asset prices and the ratings around Ethiopia. The Chinese were moved quickly in terms of Ethiopian debt, as you know, and refinanced it and extended the maturity. But there's a lot of debt on that balance sheet at the moment, and it's not clear how it's going to be resolved. Ethiopia is a small issue in the scheme of things in the Eurobond market. Frankly, I think it's only got one issue out there. So that's a small positive. Jumping to Kenya, the IMF, the folks in Washington are wiring $410 million to Kenya as part of the 3-year package, which is just about $2 billion. This will be helpful in the current circumstances. The IMF had a very high GDP projection for Kenya, like they did for India and some other places where I think they're going to have to bring those lower. But, Kenya, in this context of uncertainty in Ethiopia and general instability in the neighborhood, is playing its best card, which is its geo-economic card. And essentially, I think the multilaterals like the IMF and the World Bank keen to keep Kenya on board at this time of increasing volatility in the region. Safaricom, as you know, are entering the Ethiopian market. They've dialed up their participation in their consortium from 51 to 56%. Sumitomo, CDC, and Vodacom in that consortium. You've got Orange going for the stake at Ethio Telecom, and you've got MTN also going in there. Depending upon how that pans out, that will be a net gain for Ethiopia. But for Safaricom, the SuperApp thing, which has been in the works for a while, formulated, I think, on Jack Ma, of course, now under a little bit of pressure, but Jack Ma's SuperApp that he had with his business, I think it's a similar iteration. And then your other headlines, KenGen, $6.5 million geothermal power project in June. But the share price has been on the slide, last trading at 4 shillings, which is a record low since the listing. The Ascent Capital, that's a good chunk of change, $100 million. It's meaningful. Puts them into the middle league. And then RwandAir shifting focus to Africa routes. Look, for all these airlines, they need to look at these African routes. These are where people are paying more money, where there's tremendous latent demand which can be tapped. I was just looking through routes. You imagine it's Nairobi, Dar es Salaam. You imagine it's capital to capital. No, it isn't. There's huge demand into our second and third cities. And if you can tie those up, you're going to have a very interesting business and a profitable one.
Yeah, thank you so much, Ali. Within the West Coast, I'm sure Joshua Davis is keeping an eye on Nigeria's President Buhari's fresh request for about $6.2 billion external loan, which is asking the Senate to approve. By the way, there's a bit of concerns around that. By the way, Access Bank looks like good news already indicating the completion of the acquisition of BankABC Mozambique, which bought from Atlas Mara, and all of that is now been done. That's another dusting for Access Bank after completing the Agro Bank acquisition in South Africa. FMDQ continues to list a whole lot of bonds and CPs over the last few days. At the last count, this looks like about a fifth for the TSL SPV, 12 billion. naira series. Bank of Africa, based in Benin, in the branch they're paying 436 CFA for net share dividend for last year. Put something on the table. But good news for Consolidated Bank of Ghana getting $50 million credit facility from the ECOWAS Bank for Industries and Development. And Ghana is again a predictive discovery, raised $20.7 million to dig for that gold at the Balkan mine in Guinea. Look, so Joshua, let's get started with this Access Bank and the headline story around President Buhari's 6.2 billion fresh loan.
Okay, so thank you, Boston. I think, like you said, that is really the big headline right now is the whole President Buhari talking about a $6.2 billion loan, which I think they said comes to about 2.3 trillion naira or thereabouts. It is a big concern because the loans that we've taken out up to this point have raised our total debt profile to, I don't know, something around 24 or so trillion, if I'm not mistaken, but that's both domestic and foreign, and that's both government and federal government and state government loans in total. But it's a bit concerning. I mean, I'm not entirely sure what, I've not seen, the specific breakdown of what they intend to use all of that money for, what the funds have been earmarked for. I'm not sure whether the Senate will go ahead and approve it, although this Senate and this National Assembly has been far more accommodating of the president's, request in the past than the previous assemblies. But overall, it is a big concern. I won't lie, because at the moment we're not generating enough. I mean, just recently I saw some news that Nigeria's rig count is down by, I don't know if it was something like 15%. So we're not producing as much oil, and so we're not even getting as much revenue, and that will affect our ability to pay back such a huge loan. We're already seeing Macron talking about basically providing debt relief for Sudan, and we might end up in that kind of situation if we continue this kind of heavy borrowing pattern. And I don't think that that's something that we want, because obviously it will reduce the international community's faith in us as a country if we are not able to pay back our loans. And collecting this kind of loan, even if there is a huge moratorium for however many years and then we start the repayment process, the truth is, if we're not able to generate value from these loans that we're collecting in order to repay them back, then there is really no point. So if we're just collecting money to pay down recurrent expenditure and then a little bit of capital expenditure, it's not really enough to generate funds internally. What we're really supposed to be doing is attracting investment that we won't have to pay back, investment that will pay itself back through generation of profit. That's really where I think the government's focus should be at. But for whatever reason, this is the path that has been chosen by this current administration. Moving on to the Access Bank story, like the management of Access Bank have said already, they are very ambitious about growing across Africa. They said that they would complete a few acquisitions this year. Last time I spoke to them on one of their investor calls. And so I think this is just part of that pattern. I think they're already in Mozambique. This was just an acquisition to sort of grow their assets in that country. And we can expect them to continue to do this kind of inorganic growth as time goes on in order to become one of the largest banks across Africa, and to leverage on the AFCFTA and being able to provide services across the continent, through a single link system that would allow them, access to many different markets and basically make them the go-to one-stop shop for payments across the continent. And I think that this is just, in line with that plan.
I think we have quite a whole lot on our hands. Joshua, you agree with me, as well as Ali, because moving next straight to Southern Africa, and this is not coming good from Moody's as well, talking about the most advanced and industrialized economy on the continent. Weak growth could see socioeconomic tension intensify. We all know what this means. It's a very subtle warning to say, look, you don't fix things very quickly. You could see unrest on your streets, on the streets of Joburg and elsewhere, and then that will not be good news. So I think this is just a hint from this rating agency as well. But again, when you look at other corporate news where Vodacom is looking raise its operational target growth targets between mid to double lower end of the single digit. Heineken is looking to buy South Africa's drinks maker Distell. Namibia bans poultry imports over avian flu from South Africa. And of course, AXA Corporation boasts sales volume growth in the 9 months period to March. Ali, let's weigh in on the big macroeconomic story around Moody's in South Africa to start with.
Yes, so I think you must remember South Africa's economy contracted, I think, something like 7% last year, which is pretty brutal. And that was following on a sequence of 6 years of per capita income decline, consecutive 6 years, which is a similar story to what's happening in Nigeria. And in terms of unemployment numbers, they're extremely high, as we all know. So I think Moody's, this is a warning shot across the bows of the Ramaphosa administration, who've been fortunate that there has been some recovery. There's more confidence in the rand. There's been demand for the bond market. But what they are talking about is the underlying society, and those tensions and stresses continue to build. And I think they're quite correct to warn the government of the situation. And now, the government, given its debt to GDP ratio, has very little money it can throw around, if things get a little bit tricky to manage. So I think perfectly acceptable ratings, a perfectly acceptable commentary that Moody's have put out. But they've left the ratings unchanged. So yes, I mean, post-apartheid optimism has dissipated somewhat, and I think there are a lot of people who are not working, who are unhappy, and don't see where the future is going to take them. And I think that's a problem that's not necessarily just in South Africa, but it is exacerbated there. Vodacom raising operating growth target to mid to high single digits. We've had this dash to digitization globally since the pandemic, and I think they're beginning to ride that wave. They got the stake in Safaricom. They're going to have a stake in Ethiopia. They got a good broad range of assets across the continent, and I expect them to begin to outperform now. Heineken, yes, I think, it's a little clever trade by Heineken, right? Distell came under pressure because of the lockdowns, was a tough year for them. And I think Heineken is swooping in on this opportunity. And it's interesting because Heineken tend to focus on beer, but Distell is a much wider portfolio of drink assets. There is concern about avian flu. This is a Namibia headline you've got. And they've stopped importing chickens from South Africa.
My interesting stories we have around the continent. But again, if we move things around a little bit, I'm sure when you look at headlines such as from Afreximbank, based in Cairo, announcing yesterday the conclusion of $1.3 billion dual tenor offer, 600 another $700 million. This looks like a big deal. I'm sure will get Joshua's attention. It looks like both Afreximbank and EIBD are moving fast and furious, as it were, in securing whatever relationship. 2 days ago, EIBD announced an MOU with the European Bank for Reconstruction and Development to help fund the $2.3 billion or $2.3 trillion development funding gap on the continent. We've talked about Sudan already. Then you've got the central bank in Egypt. Total financial obligations are around 2.1 trillion local currencies in last year. Credit Agricole, the fair value, according to Beltone, is around about 40 Egyptian pounds. And then, of course, we have the earnings from Kuwait, Egypt Kuwait Holdings, first quarter profit after tax is net about 40%. Joshua, I'm touching base with you on the Afreximbank $1.3 billion bond.
Yeah, so like you said, obviously there's a bit of a rush currently to sort of pour as much money into viable markets, I have to stress, viable markets on the African continent, because the truth is, in terms of investments, in terms of, bringing in capital and expected returns over the next 10 or 20 years, I think they have recognized the fact that Africa is, the frontier that has the most potential if managed properly. Because the truth is, whatever amount you pour into the continent right now, in the right markets, in the right industries, has the biggest potential for growth, just in terms of population, in terms of, being underserved in all the different aspects of the economy. And you can start to see that if a lot of things are put in place properly, these kinds of things will shape the market and will shape the continent going forward. And I think that's what this is all about, is really getting in ahead of, the curve in order to ensure your position going forward. And that's really what they're doing. They're just marking out their positions. I think that is really what's so smart about what France is doing, is they know that by canceling a large bit of debt and giving loans, if they are able to manage things correctly, and it does come out, it's a little bit of a risk, but if things turn out positively, they are in prime position to benefit when that economy goes, starts to grow at an extraordinary rate, and development starts to take root, take hold within those countries, and that's something that we ourselves need to recognize and also start to position ourselves for. And that's maybe the only reason why we'll be able to even secure that kind of $6.2 billion loan, is that they know that our country has so much potential, just by ways of population, by ways of underdevelopment. There's so many things that were underserved in this country and, in the wider continent, that as soon as that market is opened up, as long as that may take, unfortunately, the way things are in Nigeria and in Africa, it takes a bit longer than other parts of the world to get developments off the ground and to really move the countries and move the continent in the right direction economically. But it will still happen, because it is inevitable, unfortunately for us. It is quite inevitable that development will happen. It's just the pace of the development that is really up to us.
Well, thank you, Joshua. Ali, sums it up for me, because it looks like, yes, you have the big names, the big boys, Nigeria, South Africa, but it looks like the DFIs, the deep pockets, the Chinese and others are fishing for new economies, new frontiers, because taking $5 billion off the table for Sudan is no peace deal, and putting another $1.5 billion funding window there, it looks like Sudan is being placed strategically somewhere there in the Sahel. What's going on here?
So I think, it speaks to the centrality of Sudan from a geopolitical, geoeconomic perspective. I think, France tends to coordinate a lot with Saudi Arabia and the UAE. Specifically in Northern Africa, you're seeing that coordination being put to good effect. For example, the French interventions in Morocco were partnered with the UAE. I think you've got this coincidence of France, UAE, Saudi Arabia, who have a very keen interest in Sudan and other Western economies. And therefore, I think, and a perspective, Sudan was a very rich country at one time. During Bashir, its per capita GDP was close to $4,000. You've got plenty of resources there. And I think the French are very shrewd and are basically making a bet that if they put the money down big and they put it down now, they will reap a very good harvest. And I think they definitely will. Touching on Afreximbank, it was a big issue that they put out there. I thought they priced it to clear at around 200 basis points over the US Treasuries. So it looked very attractive for anybody who's a credit trader. You're getting an implicit, very strong credit paper at a very good spread over Treasuries. So I think, clearly there was a lot of demand out there for Afreximbank. I mean, they've really expanded the portfolio. They're making their presence felt, and in many respects are very geopolitically astute. You will remember they had their last annual meeting in Putin's Russia, so they know how to play their cards with some dexterity under Chairman.
I agree with you. Thank you so much. There's a whole lot happening on the African continent. And thank you, gentlemen, for bringing some of this into the conversation this morning. Joshua Debisi, banking analyst at Vetiver Capital, one of the largest investment banking and securities trading firm in Nigeria. And of course, Ali Sacho, the founder and CEO of Rich Frontiers Management based in Nairobi, Kenya. Thank you, gentlemen. Have a great day. See you again tomorrow. Bye for now.